RBI has proposed to waive off the prepayment penalties or foreclosure charges on the floating rate loans for individual borrowers, especially impacting the MSMEs. But what does it mean for the sector? Let's understand more with Rahul Malani, who is joining us on the show right now. Hi Rahul, good to be speaking with you. First up, give us a sense that what does it mean for the sector overall? It is a draft circular indeed, but what we understand, Rahul, that the current penalty on the personal loan for the retail borrowers ranged between 4 to 5% of the outstanding principal. Once this goes away, give us a sense that which segment will it impact more? Will it be banking names that will get the most effect or burn of that, or rather the NBFC players will be impacted more?
So, firstly, good afternoon. So, overall, the outcome of this draft circular will be negative for both the banks and NBFCs. Particularly HFCs, the housing finance companies would be impacted the most because of the higher share of individual retail loans. Overall, but nevertheless, as per the discussions with the industry veterans, they are citing that the individual floating rate loans, either that is home loans or MSME loans below 7.5 crores, would be repriced higher because they will not take the damping in the because ultimately this they will not take the blunt of on their retail profitability book. Overall, I think so. It would be either reprice in the yields or either there will be tweak in the other fee charges like processing fees, etc.
Okay, Rahul, while I understand that individual borrowers and sole proprietors are charged anywhere between 2 to 5% as foreclosure fees, I also understand that some banks and NBFCs don't charge foreclosure for MSMEs. Could you clarify if at all they do, and if so, then what could be the rate for MSMEs and what could be the loss on account of this segment of the foreclosure fees?
See, I would not be able to directly quantify this amount, but it varies from companies to companies. But overall, for all the total fee income, it stands around 10 to 15% of the total overall fee income.
So what you say is that the fee income might be increased in the times ahead, but Rahul, also give us a sense that how is this expected to impact the competitive intensity in the sector overall?
See, now banks will. I said there will be demand. There will be demand for bank will likely push retail loans which are fixed in nature, or they will give a proposition to the customer with a higher risk adjusted yield for the floating rate loans, which I have which I got to know from the other industry veterans.
Rahul, thanks for joining us and breaking down the impact of this proposal from the regulator. On that note, we'll let you go. Once again, thank you so much for joining us.